Welcome everybody to our session on appropriate financing instruments for social economy actors. My name is Pavel Kapstorfer and I'm Network and Partnership Manager of Microfinance Centre, and I will moderate this session with our distinguished speakers. Let me welcome first Michal Radzivil from Impulse Investment Manager. It's a Brussels-based investment manager with special know-how on social investment and microfinance. From their core expertise in cooperative equity financing, they develop strong skills in supporting financing, alternative investment funds, providing responsible long-term financing to socially driven financial intermediaries. On our session, we are also supposed to have Lazar Petrov from the he's a director of financial instruments and operational programs in the Fund of Funds in Bulgaria, and he will present to us the position of the fund and cooperation with financial intermediaries in Bulgaria. How do they support the sector with their products? Hopefully, he's joining us soon. And meanwhile, I suggest I give you also short information about SIFTA program. To mention, the program is continuation of an enhancement of the EU program for employment and social innovation technical assistance, and this session is supported by this program. For those who do not know, it provides targeted capacity building, project advisory, and market development support to financial intermediaries active in the microfinance and social entrepreneurship sector. The eligibility is for the applicants from EU 27 member countries, and also beneficiaries of these programs are banks and non-bank financial institutions and social enterprise finance providers such as investment funds, impact investors, incubators, accelerators that offer or are in the process of widening their scope with a view of providing accompanying financial support to social enterprises. And we will start with Michal Radzivil, and we will see if we can also manage to join Mahakiramane, who would be, additional contribution to our session. Let's see if the connection works as it should. Maha is head of positive impact business accelerator for BNP Paribas from France, and she would definitely have also very useful information to share with us about their practical approach and instruments they use to support the social economy sector. So, Michal, may I ask you to take the floor to be the first speakers and share, your presentation, to give us overview of different instruments, to give us overview of your current work with your fund. How do you support? How can you support social economic actors? Please, the floor is yours.
Hello, everybody. Thank you very much for inviting me here. I'm very, very happy to be able to present my experience and Impulse experience in financing social enterprises. Maybe just two sentences about me. I'm active in financing the social economy, mainly in Poland, but in different Eastern European countries. It's been now more than 20 years. And currently, I participated also in the creation of FEBEA, also 20 years ago. FEBEA is the Federation of European Alternative and Ethical Banks. And currently, and it's been since 2006, I work as a manager, as a fund manager, investment manager for different funds, managed by Impulse, as Pavel said. So maybe we could pass to the second slide. Impulse is a licensed fund manager focusing on impact investment based in Brussels. We are registered with the Belgian financial regulator, FSMA, now for more than a year. The initial fund that Impulse was managing was Copest. It started in 2006. It is still active, but it is at the end of its life, and it provided senior and subordinated debt to financially minded, socially minded financial institutions in Central Eastern Europe. We did something like 80 million euro of loans, subordinated and senior, and we are now managing the planned closing of the fund. The next fund is Helenos, which is based also on the experience of Copest. It targets the same type of clients, but in a broader geography in the whole Europe. And the main focus of Helenos is equity. This is one of the conclusions of the Copest experience, is that the equity is something that is probably mainly needed for the development of the microfinance and other financial institutions in this area. We are now in process of starting a new fund, which is called Impact EU. It has already been created. It is not yet operational, but it will be operational starting from Q1 2023. So Impact EU, again, it's a kind of successor fund for Copest. It will be focusing mainly on debt, but equity is also possible. And it will be also able to finance directly social enterprises, non-financial social enterprises. So maybe we can pass to the next slide. I think that the definition of the social economy actors is not the topic of this presentation. It probably has been already treated during the initial sessions in this conference. In my opinion, what is interesting is really to understand that they are institutions who have a financial mission, but also obviously some social or impact mission, what is called a double bottom line, and are the MFIs a social enterprise? I think that this is also a discussion. And what I would like to stress in the investors' approach is that the social economy actors, in my opinion, are not just another class of assets, as some of the financial practitioner pretend. They need a specific tailored approach in financing. The next slide shows so what is needed to help or to support the social enterprise is really a whole ecosystem. So this is a table which shows the different actors active in this area. I think that what is really important is the support of public authorities in various areas. Next slide, please. So from the experience that I mean, any type of financial instrument can be used for social enterprise, to finance social enterprises. The list here is a list of, I would say, typical financial instruments. The big issue is the conditions, the detailed conditions which are attached to them, and this is what can make the difference, and this is what can enable financial intermediaries to finance, to support social enterprises. Next slide, please. So here we show a little bit what are the pros and cons of different instruments. It starts from a preferential loan. The simplicity and the low cost, of course, is very, very, very important. As it is a preferential instrument, obviously the eligibility and availability is not that obvious. Then a standard loan, where I would say the eligibility criteria usually are simpler. It obviously has a higher cost and usually some collateral requirements. Subordinated loans, which are based on the, let's say, banking regulations. So they are taken from the banking regulations, obviously, where they are not subject to banking regulations, but they are loans which can be used as quasi equity. So they don't use collateral. They should enable the social enterprises to have a potential leverage and get additional financing sources. There is also equity. We have an experience of equity financing of social enterprises. Obviously, the risk participation is a very important factor of this, but the contractual provisions are usually quite complicated, and very often this instrument cannot be applied, especially as social enterprises are often cooperatives or NGOs. Next slide, please. I think that from the experience that we have, the main issue is really the accessibility, and as I would say, the commercial financial institutions have a difficult time to support social enterprises. The role of the public authorities is crucial here to support social economy in different areas, but especially to make these to make financing more easily accessible for the social economy actors. Next slide, please. So this is a list of the financial intermediaries active in the sector. Probably the banks again have a difficult time to support the social enterprises. Maybe Maha will tell us a little bit more about the approach of BNP Paribas, which is probably a little bit different. And there are some non-banking financial institutions, alternative lenders, investment funds, and social impact funds. Next slide, please. Yes. So in order to enable these financial intermediaries to channel financing to social enterprises, the intermediaries take advantage of either guarantees coming from public sector or from risk sharing instruments. There was a very, very extensive experience of these instruments in Poland. When I worked with TISE, we had a very big program of loans and subordinated loans for social enterprises, and this was possible thanks to the support of the public authorities. I know that tomorrow there is a session of my successor in TISE, Katarzyna Dubek. She will definitely talk to you about the present of TISE. And the next slide, please. So this is just a summary of the different instruments that are used by the intermediaries and finally by the social enterprises. I mean, which are given to the social enterprises by these intermediaries. Next slide, please. And finally, the leverage effect. This is a very important factor. Thanks to using quasi equity or risk sharing instruments, the social enterprises should be able to get some senior debt which requires guarantee. And this guarantee, these loans are typically granted by non-banking financial institutions, I think. So I think that this was a global, I would say, catalog of different instruments, different actors present on this in this area, on this market. And so thank you very much for your attention, and I give the floor to my colleagues. Thank you.
Thank you, Michal. Thank you very much for this really comprehensive overview. I think this is also based on your previous experience, so you have a lot of experience with the social bonds, etc. So thank you very much once again. And I would like to give a floor now to Lazar to present his institution and the services they offer to financial intermediaries in Bulgaria via support of European Union, European Social Fund.
Hello, everyone. Thank you. Thank you so much for the invitation and the opportunity. Okay, so I'm trying to be not very long in the presentation so that we can have a more interactive conversation after that, and maybe also listen to some questions and discussion. But either way, it's just a couple of words about us. We, the Bulgarian Fund, the funds, as we often call ourselves, and or in other words, the fund manager of financial instruments in Bulgaria is our official name of the company. We are active in the management of instruments coming with the support of the European Structural and Investment Funds, the ESI funds. And we think of ourselves mostly as a knowledge hub for financial instruments in Bulgaria. We have gained a very interesting experience over the last 5 to 7 years in the very broad spectrum of products. But just a couple of figures so that about our size and about our portfolio. The assets under management for the mandates we have under the programs 2014-2020 is about 650 million euro. We expect this figure, this number, to be around doubled with the programming period, the multi-annual financial framework for 21-27. But this is about to be finalized in the future, the mandates, I mean. More than 2,100 projects, companies have been supported via the instruments in our portfolio for this period, for the 14-20. And yes, we are a state-owned promotional financial institution, national promotional financial institution. We cover, as I mentioned, a broad range of products, debt, equity with the different subtypes like quasi-equity, different type of capped portfolio guarantees and other credit enhancements products. Also infrastructure, we have urban development funds and water fund. And yeah, maybe no further details about the company, about the portfolio. We cover the basic concepts that we try to cover is we support SMEs, the urban and rural development, environment and social economy, maritime, rural development and maritime and fisheries are small mandates, but we are trying also to make some progress in that areas. Social economy is not a large part of our assets under management, but is a very important, significant one where we have spent lots of efforts, both in terms of how we structure the products and how we select the intermediaries on one side, and on the other side, regarding the monitoring of the implementation of the products and trying to find out flexible ways how to support both the intermediaries and the final recipients. We have been able to accomplish some swift progress in the last years in terms of a percentage of our contracted resources with managing authorities. A large percentage of them is already contracted to intermediaries. We don't invest directly. We work only with as a fund of funds for the time being. So it means we contract, we perform procedures for selection of financial intermediaries. And as you can see, almost the whole amount of our assets under management are already contracted with the intermediaries, and to a large extent, the financial resources are already contracted also with final recipients. And regarding our mandate for the so-called inclusive developments, the mandate where we strive to achieve as much as possible impact regarding the social economy is under the National Operational Program Human Resources Development 2014-2020. We have been able to structure 2 products under this mandate, and one is so-called funded risk sharing or a loan microcredit facility, and the other one is an unfunded risk sharing product, a capped portfolio guarantee. Maybe the most significant bullets to be mentioned is that our final recipients, the final recipients of that for that instruments are so to say startups on one hand and social enterprises on the other. We are trying to put some accent on disadvantaged groups and people with disabilities and people that have been unemployed and are, so to say, part of this inclusive development. I will give some numbers regarding how many of the products how many of the supported companies belong to the group of the disadvantaged group, so to say. About the investment strategy, there's nothing so specific in terms of the financial structure, but of course there are some specificities coming from the eligibility criteria of the program. So here you can see just what type of financial intermediaries we have for the moment. We are very proud of working with so to say, the microfinancial ecosystem in Bulgaria is not very well developed, but we are very happy with the partnerships with Credit, for example, where they make a lot of progress and they work very intensively on providing the whole amount that we have contracted with them. Also, in terms of banks, of credit institutions, we have been able to attract the attention of some of the banks in Bulgaria, and regarding their goals for micro lending, in order to see whether they will be able to cover a large part of the country and a large part of the startups in that area. Currently, around 700 projects have been financed. 650, but it is as of the end of September, so there are more than 700 at the moment. And some more information about the basic features of the products, seen from the perspective of our perspective as a fund of funds. We have structured the funded risk sharing, the loan microcredit facility for tickets up to 25,000 euros. And we participate in each single loan up to 90% of the credit amount, which means, in other words, that the private co-financing is between 20 and 25% in each loan, which in other words means that the aggregate interest is lowered by 75 to 90% compared to market interest rate for the same final recipient. As regard of the state aid, Both products we have implemented are under the de minimis rules. And the kept portfolio guarantee covers tickets up to 50,000 euros. And we guarantee 80% of each single amount with a portfolio cap rate of 25%. Of course, there are some credit enhancements regarding the maturity, the grace period, and so on. And I think those are the basic features to be mentioned. About lessons learned, I think it's worth mentioning that what we saw from our perspective is that we should be really looking for the most flexible approach regarding the market realities and trying to find out what is the best combination of the implementation of the SIF rules in a very proper way on one hand, on the other hand looking for the most flexible approaches which are close to the market realities. It also regards to the administrative burden, of course, and we saw some very specific situations which required adaptation during the implementation stage. I mean, the COVID situation, and then also a couple of other crises, lately, so to say. Of course, it's really important to spend efforts on promotion and gaining awareness about the potential, so that the final recipients really have a good perspective of being well informed about the opportunities that the financial instruments could provide them. Those are the most significant things, I think. We hope that we will be able to continue using our experience and our knowledge regarding the social economy and the implementation of financial instruments in that area. In the period of 21-27, we will try to spend efforts on that, and also we'll try to, of course, take advantage of some opportunities that the new regulations are giving regarding the combination of financial instruments and under single operation with grants. And I think those are the most significant things. Maybe just as a stage of development regarding the implementation of our instruments, just two figures. We have around 20 million euros being already contracted with the with the final recipients under the funded risk sharing, and around 4 million committed under the guarantee. So I think those are the basic, some of our final recipients. And maybe I will stop here because I remember that we have some time restrictions, and I'm of course open to have a more collaborative discussion now. Thank you.
Thank you very much, Lazar, for your presentation. I think you give really a nice practical example of one of the European Union countries, how the sector of social economy sector can be supported. And I think this is a good example which can be replicated also in other countries. I mean, if you take the initiative with the authorities, managing authorities to, to have this support into the sector. So we wanted to show a real life example how through EU funding can social economy sector be supported. And now I would like to ask Mahakiramane from BNP Paribas. Unfortunately, we have some technical difficulties, but let us improvise and see how it works all together. So, because her presentation is also very nice, and I think she's going to show us how impact bond matters, in this world of inclusive finance. And so, let me ask Mahe to take the floor. I will try to connect her and see how it could work. And I will share her presentation. So let me also share the presentation she prepared. You should see it by now. Mahe, please take the floor.
Yes. Hello, everyone. Can you hear me?
Yeah.
Yes? Wow. Okay. So we've managed to fool the technology. Great. Human beings are still essential. So thank you for having me, and sorry about those technical issues. We didn't figure out why my camera works but not my microphone. So just to tell you a bit, in BNP Paribas, I work in the group CSR team. I've been working on impact topics for 10 years now, and more specifically on how to approach social and solidarity economy actors, and specifically impact entrepreneurs, what we usually called social enterprises, but now we've moved to a new way of calling them impact entrepreneurs, so we can also compute environmental actors that were feeling excluded with the fact that we called them social enterprises. So if you can move to the first slide. Great. So just to how we compute this big concept. So for us, there is the social and solidarity-based economy, and there we put all the status that are not that are actually dealing with the solidarity purposes, but it can be with an economic model or without. So this is the bigger circle. And just to give you an idea, it's about 6.3 billion financing for us in BNP Paribas Group. Then we have the second circle, which is impact entrepreneurship. So before we called it social entrepreneurship. So it's a combination of a positive social environmental impact with a business model. But what is very important is that the mission of the social enterprise or impact entrepreneur is above the financial profitability, although he supports his model through an economic model. He can sell products or goods, but the most important is that he includes positive impact either on beneficiaries, people that are fragilized, vulnerable people, to include them in goods and services that they don't have access to or not sufficiently access to, or having a positive impact on a dedicated environmental topic. It could be circular economy, for example. And this, to give you a range, it's around 2.35 billion support from the BNP Paribas Group. So it's mixing financing, those numbers, they are mixing financing and investment. And then we have the financial inclusion, which it was an interesting question you asked, Michael. For us, we put it within the impact entrepreneurs or social enterprises, because for us it's a specific way of giving access to a specific good, which is a financial service. So this is where we put the microfinance, for example, the microfinance financing that we do, and those are around 350 million. So those are the three circles. Maybe you can pass the next slide. Thank you. So we have a dedicated framework to support impact entrepreneurs. So the second circle, it's called Act for Impact. And it's a label, but it's also a group, a range of different offers, which are both financial and non-financial. Because as we built this framework since 2012, we realized that there are financial services that are needed, of course, and we are a financial group, so it's this one is like quite easy. But there's also a range of non-financial support that we can bring, and that is also very important for impact entrepreneurs. So the first step we did is just to have counselors that are actually formed and trained to understand the business model of entrepreneurs, impact entrepreneurs. So they are dedicated to this, so they can understand the financial specificity and the impact specificity. We also have a credit policy that takes into account the specificities of impact entrepreneurs in terms of maturity of the financing, also in terms of not taking any collateral directly on the enterprise, and so on. We have also developed, this is a non-financial tool, but a specific impact methodology, because we realize that we cannot understand the model if we take out half of their DNA, which is realizing impact. So both financial and impact must be understood in a unique analysis, so that we can actually understand the whole model of the social enterprise. We also have, of course, pro bono to have our clients benefited from the competencies of anyone from the group. We also support a lot the networks and the ecosystem of impact entrepreneurs, which is a very specific ecosystem. So what we understood is that we can help them grow financially, but if they don't have access to a certain ecosystem, for example, dedicated networks or incubators, or for example, funding like early capital, then it's difficult for them to grow. So we also invested quite a lot in supporting the ecosystem of social enterprise, where we can orient our clients. And of course, the financial specificities. So there are dedicated financial products, which I will talk about: impact bonds, SLL, impact investing, solidarity funds, or even grants. So those are all the products that we offer to impact entrepreneurs. So if you can move to the next one, so I can focus on a few examples. So the impact bond mechanism is a very original tool, because it allows to finance association, so a non-for-profit or a social enterprise, without them bearing a financial risk. So it's very interesting. It's a multi-party contract where you have investors that will actually invest in a dedicated, innovative program, which is expected to have a certain number of targets in terms of social or environmental. So those targets are predefined with all the counterparties all together upfront. So they say that the program needs to reach a certain amount of beneficiaries having a certain impact on them. And then if the impact is reached, there is an independent evaluator who will measure this impact. And if the impact is actually reached, then you have an outcome funder, which could be either a public authority, a ministry, or a DFI, who will reimburse and remunerate the investors. And if there is no impact generated, then the investor loses what he done. So it's an equity-like product, but it's based only on the DNA of the social operator, which is generating impact. I will give you so it's a win-win-win situation, because if the program works, then the investors, they get back their investment and they have a premium. The social operator, he doesn't bear any financial risk, but he gets an amount of money during a few years, so he can actually demonstrate the impact of his program during such a number of years. And the outcome funder, it's also a win for them, because if the impact, they only pay when the impact is generated, in contrary of when they pay a subsidy where they pay it upfront and then they don't know if there's an impact or not. Here they only pay if there is an impact generated, so it's efficient for the taxpayers' money, and they can experiment new modalities of intervention. So if we pass to the next slide, I can give you maybe a few examples that might concrete it a little bit. So those are the ones that we did. The first one we did in France was with ADI, which is a microfinance institution, who wanted to develop a specific modality of intervention on very isolated rural areas. ADI is a quite urban service provider, and they said that they could bring the same, knowledge of microfinance, but to very rural, isolated rural areas. So they tried an intervention where they would go at the encounter of the potential micro entrepreneurs, instead of having an urban agency where the micro entrepreneur would come, so that they would have a better outreach. And so they actually completely reinvented the way they intervene. The purpose was to have a certain number of beneficiaries, but also to measure their positive outcome on auto-employment or employment. And a second indicator is the actual sustainability of employment 2 or 3 years after the end of the program. So there is a notion of real impact, that the impact is sustainable within time. We have one also, and then I'll stop on this, on the Fondation d'Auteuil, which is a program to avoid foster care placement for children who are in the precariousness in their families. Here in France, when the children are in precariousness, the judge placed them into foster care because they estimate that their parents are not able to provide for them. And so this program means to avoid this, because they say there is no dysfunctioning of the family, it's just a material problem. So what they do is that they welcome the family within a shelter altogether during a year, and they help them work on their difficulties. Should it be housing, should it be employment, should it be administrative problems or whatever. And the purpose is to avoid the children to be placed into foster care. And just to give you an idea of why it's a win-win, each children in foster care costs 60,000 euros per year for the government. So there are two impacts. First, it's much better for the child to be with his parents and family in a normal situation, and moreover, it is a good economy for the state and the taxpayers' money. So this is an interesting tool. And maybe I just can, if you pass to the slide after, I can give you two other tools that we provide, which is sustainability-linked loans. So those are tailor-made loans where the bank will improve the interest rate according to achievements of certain KPIs. So here, the operator, he actually bears a financial risk because he's the one contracting the loan. But what is interesting to him is that his interest rate can go down if he reaches a certain number of KPIs. So I put examples. It can be increasing by X% the percentage of recycled material. It can be reduce water consumption. It can be increase diminish the waste. So those are KPIs that are also measured, and if they are reached, it's interesting for the borrower, because then he has a more favorable interest rate. And of course, impact investing. So we do impact investing for our clients. So this is asset management who has a number of funds dedicated to that. But we also opened on our own account of the bank, so the own proprietary investments, an envelope of 200 million dedicated to impact investing. So in my team, there is someone dedicated to investing in impact entrepreneurs or impact funds that generate, of course, positive impact. And this impact investment, there are three main areas. It's natural capital, local development and social thematics that are quite large. So I think that
Thank you, Ma, very much. Thank you very much. We managed at the end, so thank you once again. And yes, I think so. Indeed, maybe there are some doubts, whether there are instruments in the field which can support, social economy players. But I think today we heard, from 3 different speakers about the instruments which are already implemented in the field, which indeed works very well. And I think it's just matter to get a real good orientation within this instrument area and be able to fit in certain box. So I encourage the financial intermediaries to search for the partners to be able to to draw the benefits from such a cooperation. So thank you very much, all of you. And let me also ask participants if they have any urgent question. We have only really limited amount of time until we need to end the session, but still, if there is any urgent question, we could try to answer that. In the chat, I didn't see any question, so in case somebody wants to speak up, you need to apply for the question to speak on live on camera. But if not, then I would like to thank you, all of you. Before you leave, we would appreciate very much to have the poll evaluation of this session, which I just published, and you see that, and we would greatly appreciate your feedback, whether you consider this session matching your needs and the level of that match. So please leave us some feedback. We would appreciate it very much, and we hope and wish success to all the speakers with their activities and supporting social economy sector. Thank you very much.